TGIF face. Hope everyone had a decent week, wild week in cable. Continued strength in S&Ps, and here's the yield, 10-year. We're almost at this is a weekly 38%. Was thinking that this could be a failing rally, maybe back to 290. I have some confluence with the 50-day moving average. So part of that is definitely a big part of it is risk on. So people have been looking for areas to short S&Ps. And through my intelligence gathering, look at these weeklies. I was looking for 26.59 to 26.90. So we're rallying into this. A lot of people starting to talk 61.8, 27.08, but you have to say the market did nothing wrong unless we get a very huge reversal in S&Ps, and it's not quite where I'm getting ready to put my toe in the water. The most boring trade of the week goes to the dollar index. Okay, I still think that there's a break coming here in the Dixie. Maybe we're rallying into this time zone. I know a lot of people laugh at it, but sometimes you do get turns at on eclipses, and there's one on Monday on MLK Day when the U.S. markets will be closed. So still think there's a shot for a break back down into this 94.25 level or so. That could also be what's behind a blow-off move in equities. So looking at that, I'm tempted to start shorting the yen. At least it's come off its weekly highs a little bit here, but again, you can't call this a reversal week, but we're getting back to this major breakdown area that comes in right up around 110 or so on this weekly moving average, the 50 again. So I think this is going to be, we could be there by early next week. 110 is going to be a very critical area. See how it was here, and once we got over this 110 area has been kind of a important pivot. So we'll see what happens. This should be, even if we're not going to go to new lows on the flash crash, maybe what we do is we get 110 and then 107, something like that. So that's my view in the end. The gold, you looked at the gold, and I, since I've been looking for a weaker dollar, I thought we would break out to the upside, but the opposite is happening here. If you just look at this triangle, that this candle really took it out. Why can't we trade 1265 or so in the coming weeks if we're rolling over here? So I'm conflicted about my view in the dollar and the way gold looks, but gold does look heavy. The shares really haven't participated, and this was kind of a chop fest. I was looking for new highs before this happened, but actually we have another inside week, so we have a double inside week in gold. Pretty unusual. So maybe next week we either take out this week's high or low. Probably the way it's set up is that we're going to go down into early next week, and then maybe they try and turn it one more time. But as you can see, here's another 1265 area here on the weekly with moving averages, and the daily you have a lot of confluence at 1250. So it looks to me like the path of least resistance, especially under 1280, is going to be the 1265 level. Should be a level that gold could achieve in the coming week. So when you think about it, everyone's always looking for gold to move opposite of the market, but really gold has not broken with the big market recovery. So maybe everything goes up together and down together. It's kind of like the dollar, strong dollar normally is puts pressure on the market and hurt the S&Ps this week, but a lot of correlations aren't really in sync. So, the advice I would give everyone is, even when correlations are working, is to treat each instrument that they trade as its own unique personality. And you may look across the board and see the market holistically, how, yields play into different currencies and how oil plays into Canada. But I'd say that some of the biggest mistakes I made was, believing in a correlation that was disconnecting and thinking it would reconnect, but it could take some time and some equity away from you. So looking forward, today also, Stelios, yeah, he used to have a perm. Ziggy's asking about your hair, buddy. He used to have a perm with a curly-headed, brown-haired, billion-dollar trader on a desk at a bank. So,
Good morning.
Right, buddy?
I actually used to have curly hair, but when I was really young. So Ziggy, no.
Yeah. Okay. Anyway, I know what to get you for Christmas next year. It's a membership to the hair club. They advertise. But you know what? Beauty is only skin deep, buddy. You're one of the best hearts I've met. And let's make Blake real nauseous and get sappy for a little while. So you know what? Now that
oh God.
Okay. All right. So
somebody save
all right. Go back to the markets, Del. I tried EG yesterday at the 61.8, and it actually went to 78.6 before this bounce. It's a pretty good bounce here. See. So I tried it here, and it kept washing out, and we almost got to 87.15. I mean, the week is ugly, but I know you were negative. You actually caught the top here. Are you booking it? I remember when you put it on, and Steve and I, thought we were going to break out, and it didn't break out. So that was a great call.
I did have someone, but I've taken it off. So, and I have nothing at the moment. And I actually, long term, given what's being priced by the market and the uncertainty and all that, if you put a gun to my head, I'd still be short. But before we have any kind of resolution, I think what Amanda's doing is right, which is to sell sterling rallies. But until there is some kind of resolution, there's going to be sterling rallies, or in this case, euro sterling is going to be dropping. I think it's buy the dip for the short term in euro sterling and sell the rally for the short term. I repeat that, in cable or other pairs, because what happens, the market gets ahead of itself. It thinks, oh, there's going to be an extension, there's going to be a second referendum. It tries to price all that in, and then you get taken back to reality for a bit. Eventually there's going to be some kind of resolution, which I think, whatever the resolution, apart from a hard Brexit, is going to be good for the pound. But obviously you don't know what's going to happen. So,
yeah, you bring up Amanda. Fade Amanda at your own peril is what I say. So
I agree.
like everyone else, she's not right all the time, but I've been listening and watching, and everyone here that's listening to us could do the same by just taking advantage of this. I wasn't planning a segue, but this is the last day of our promo. Okay, so what you see in face, and I think it's one of the best FX webinars on the net. I don't care that it's free. I think you could go pay $100 a month for a webinar like face anywhere, and not have the kind of team effort. And then we're not even including what happens in the chat room with our community that's very dynamic and sharing ideas, not just for an hour and a half like face, but all day long when a lot of things happen after face. So really, listeners, this is a great day to sign up. Go for at least a 6-month plan, because you're not going to really be able to make a valid judgment. Anything in 30 days is not long enough to make a valid judgment. So, like right now, if you had been with us, Greg has got a great DAX call, caught this bullish turn here. So, and then you also get the charts to learn why he thinks it. So if you gravitate towards Elliott Wave, and Andre and Grega. So, you know, they're not all winners, but you get a 2% winner, and, you know, it pays for the small loss. The pips they're historically making money, and a lot more than it would cost you for your subscription. And also, this is still a good time of the year. There's all kinds of things going on at Forest Park FX, and they are our sponsor. So they're helping you be able to enjoy face every day. So if you're not getting a rebate check, you're really kind of eliminating what could be another stream of income for you. So reach out to Trent, Justin at Forest Park FX, and really, guys, this is a great value. It's the last day of a promo for I don't know how long. And immerse yourself and grow. You know, I teach surround yourself by traders better than you. And, you know, a lot of people can, you know, do what I say, but not what I do. But I can tell you that the last almost 2 years, just being in this environment and sharing ideas with Blake and Steve and Stell and Grega really has helped me grow as a trader. And you wouldn't think there was any room for growth once you know, have been doing it for decades, but there is. So if it can work for me, I believe it will work for you. So give it a try 6 months, and, you know, get ready to have a good January. And with that being said, Blake, finally getting a little turn in cable, and Euro's trying to hold, and a lot of conflicting stuff this week. Aussie yen popped again. Are you scaling into it, or?
No, I got stopped out. Well, I mean, I put a short back on yesterday after the fact,
Okay.
but you know, it was very frustrating. I was just telling the guys and gals in the chat room, I was short Aussie yen. I sat in front of my computer literally, and I'm not exaggerating here. Let me pull up the screen.
Okay.
I sat in front of the computer for you know, 9 hours, just sitting here, just, you know, watching the market bounce around. I had a big sizable Aussie yen short on. So, you know, right here, you know, sizable, sitting there bouncing around. I'm like, yeah, you know, resistance at 78.50. I got my stops at 54. I think they were 54. By the time I got out, it was a little higher than that. I got slippage. I get slippage. If you guys don't know what that is, I may have my stops at 54, but by the time I get out of my position, especially on big positions, it you know, stops me out a little higher. So I think I got stopped out at like 60 something, 61, 62 in this volatility. I mean, I'm not exaggerating. Sat in front of my computer for hours on end, and my kids had a half day yesterday. They're off today because of we have we have that on Monday, but the weekend today there's a big car show, one of the biggest car shows in Arizona. It's called Barrett-Jackson, and it's one of the biggest car shows in the country. It's if you're a car lover, just hold on, let me see if I can pull it up for you.
Maybe you could get a company car for me while you're there.
Yeah.
What do you think, buddy?
If for those of you that are car lovers, you guys got to go see this. It's on TV. You know, you can watch it live. The cars that they sell here is just insane. I mean, like, you know, just insane what goes up for sale.
I love those old cars.
Oh gosh, I mean, it's really one of the best places if you want to buy a classic car. You can go in there and throw in some low bids, and you might get something really spectacular for undervalue. You know, it's awesome, and it's live, and it's auctioning, and I think it's $1,000 to get your auction license for the show, but you know, I've never been, but my friends have been, and the reason I don't know why I've never been, it's during the week. It's happening like right now, and I'm always trading, and so I I've just never had the opportunity, but I've watched it live so many times, and the problem is it's literally next door to my kid's school, so the kids get Friday off because it's a mayhem, around trying to shuttle kids in and out of school around that thing. So with that being said, my kids got off yesterday early. They had a half day, and I went to go cook them grilled cheese sandwiches. I 2 minutes. I was away from my computer for 2 minutes, and then this happened.
Yeah, nothing, and then a burst, and then nothing again.
Well, I mean, that was Mnuchin, talking about, possibly relieving tariffs with China, and that was just speculation, and they denied it, and but the market, I mean, is still stronger because people assume that there's really something going on. I mean, it's even though they denied it, it's they assume that there's still something happening. But that move there stopped me out, and I was literally cooking my kids lunch, and I had been sitting in front of the computer for hours. I mean, hours. It's just ridiculous.
It's like it waited for you to walk away.
It was almost to the T, and which really, I was telling, and this is going to be par for the course. I'm going to tell you guys kind of how my month has been. I made a killing in the New Zealand Canadian. I shorted the New Zealand Canadian, shorted the crap out of it at the beginning of the year. I had a huge position. I had a huge position right here at this, up in the 91, 30, 40s. Made a killing as it dropped through here, and it really almost made my month. And I've almost given back everything. I'm back to basically. Well, I'm positive, but I'm basically, in my eyes, I'm back to break even for the month, and it's very frustrating. And that was because of that position I had yesterday. It was sizable. It was, the risk reward was there. I mean, the risk, and that's all you can do is you take a position and you go, hey, the risk reward's there. What I didn't recognize is the 618 was right here, so I had my stop right above this resistance zone, the top end of the resistance. Or lower end of the resistance zone rather, got stopped out. I re-entered short. I made some money on the short up in the 70s all the way back down to the 40s. So I shorted it again, made some money here, and then I re-short. I have a position short, which is smaller than it was. So anyway, it was very frustrating. So if you're asking me, am I scaling in short? I do have a position, and I'm not too far from break even right now, but it's smaller. I did short some euro yen this morning up at 124.89. So I shorted that as we're up against 125. I think that if there's a currency I want to be short, it's really the euro, because. Really? Yeah, I mean the economic data is so weak, and if stocks are around the sell zone, which I think they are,
I wanted to see your S&P chart. We didn't even get to the top of the wedge yet. Okay.
Well, it depends how you draw it. I mean, if you draw it like this, we still have some distance. You draw it like this. And we're getting close, and so, and I don't know what's right, who's right, if I'm right, if I'm wrong, if my assumption is wrong, if it's more like this, but I had been thinking if we get past this resistance zone, we're going to challenge the underside of this major trend line, which is really close. I mean, keep in mind, look at the green.
Where'd it come in, Blake? 2690-ish?
2670,
okay,
like 2670, and we're at 2647, so we're there.
Okay.
We're close to. And one of the things that worries me so much about where we're currently at, we're at 2647. The market, and if I talk to any equity traders, I read any bank research, everybody thinks that this 2620 to 2640 was the place where the market's going to peter out. So chances are we're going to overshoot it, and then you can see the market just grinding higher. We are going into a long weekend with you could argue that there's probably some sort of talks going on with China and the U.S. There's a prolonged government shutdown, which may come to, I don't know if it's going to come to a resolution over the weekend. It looks like, everybody's dug in, but, it's weighing so heavily on polls and sentiment right now that Trump may buckle. He may actually just say, give in, and give up this fight. I'm interested to see how it plays out this weekend, but I think people are optimistic that something might, happen, whether it's China or trade. So, here we are Friday into a long weekend, and the markets continue to grind higher.
Blake, may I ask you? I know you don't really trade bonds a lot, but I know it's an important part of your overview of the market.
Oh yeah.
What are you thinking in here with what's happening in bonds?
Well, we broke below the breakout point. So if you look at, here's the 10-year, and I'm glad you bring that up, Dale. That's not the line I wanted, but I'll delete that. Let's grab this.
It's almost a false breakout there.
Well, you can say that it's back below the breakout point, and we probably are going to come back to this 121 level. And I already actually sent out the analysis on bonds. It's a little bit earlier this morning, but
so that would take the 10-year, I think, back to like 290 or so if the bonds went down to there.
Well, the first stop is going to be this 38% retracement. That's, you got this little resistance, previous support somewhere down here. That's going to be pretty significant. But yields are rising. We might be up to, on the 10-year, we might be backed up to 282 or something like that, quite possibly. So, and bonds are doing, what you would expect as equities continue to rise. Gold, on the other hand, this you pointed out this morning, we broke through this triangle on the downside, and I was thinking that as a very bullish triangle pennant.
That's what I thought.
But it was, it's the 618 just really wore on it.
Yeah.
Here we are pulling back. Now, I really wanted to talk before we have Canadian data. The good news is the Canadian government is not shut down. So we do have CPI coming out. And what I think you've got to be watching for here is a bear flag pattern. Now, this would play really well into, and let's go over to the 4-hour chart.
Nice luck.
This is going to play really well into a bullish Canadian number. All right, and the reason, let's talk about that for a second. If the Canadian number is a hot number, the CPI, and we're looking at all the data that we've got here. We've got CPI, all the this is trim to mean or common CPI, median CPI, trim. There's trim CPI right there. All that CPI data, if it comes in a little hot, the dollar Canadian is prepped for a breakdown. Now, one of the other things that would lead me to believe that the dollar Canadian would be a better play to the downside is that equities are so strong. So as equities are strong, the Canadian dollar tends to outperform. So I think the trade today is, a break below 132.20, might take us down towards 131. I think that's the trade that's set up right now. Again, I am not. And I don't have any position on the Canadian right now. I'm not short New Zealand Canadian. I don't have any exposure. I'm just talking. Now, if you're a risk aversion person, you think that stocks are going to reverse, then the Canadian's going to go that direction eventually. But hey, stocks are strong. We're going to close on probably a pretty strong note today, and if that's the case, then the dollar Canadian looks like it's going to roll over here, and that's something that I would be keeping an eye on going into today. I'm not sure how bearish I would get. I think if I shorted the dollar Canadian, let's say it broke 132.20, I wouldn't try to make more than 131.20 just because of this major 618 that comes into play right here. And that's just some food for thought. Okay, so on a strong Canadian, strong Canadian data, I think that the dollar Canadian is set up for a good short. Okay, and so with that being said, I'm going to pass it over to my colleagues, but before I do, this is the last day of getting involved in ForexAnalytix. So at these prices, and I'll tell you guys, one of the things that I want to do, which is probably our next, you can call it a quote unquote specials. We're going to do some sort of competition where you can win, you know, a month or two of ForexAnalytix, but that's it. There's only going to be one winner. So, and I'm going to give away some gear. I think, well, I've got some gear. I realize that, oh man, we got some ForexAnalytix swag that needs to be sent out. So, to some lucky traders. So I'm going to go ahead and send some stuff out. We're going to do some sort of competition the next month or so. But hey, if you want
have my address, go ahead and send it.
Dude, you have how many coffee mugs do you have? I'm sick of sending you.
Oh, I have no idea. Although I have to confess that my wife has broken one by mistake, and my son another one, but I still have, like, you know, another 5, 6.
All right, I'll send you more whenever you want them. All right. Well, good morning, Steve. Good morning, Stelios.
Good morning, Blake.
Hello.
Good morning. And I know, Stelios, you're leaving early, right?
No, this is next Friday.
Oh, next Friday. Oh, well, good. All right. I'm sure we're going to talk a little bit more about your hair then. So, all right. So, hey, be aware, Canadian data coming out. You guys, good luck Friday and TGIF, and thank you all thank you guys for everything, and thank you, Coach. You guys have a great Friday, and I'll catch you guys on the week ahead video Saturday or Sunday.
Thank you, Blake. Just one thing to add, actually, on the Canadian, Steve, before you start. We have to remember that we're expecting a flat reading in CPI, pretty much all measures like CPI month on month. We're expecting flat to last month. We have to remember that in the last month, oil has risen like $8. Commodities have risen as well. So maybe the slight risk is for it to come in a little bit stronger than expected. But then again, you know, who knows? But that's my gut feeling.
We are expecting core CPI at minus 0.2, right, Stelio?
Core CPI. Actually, the calendar I have doesn't show what we're expecting. I have CPI, not core CPI. CPI expected at minus 0.4 month on month versus minus 0.4 last time.
Yeah, and 1.5 year over year, right?
Actually, I'm looking at the investing.com calendar, and it says 1.7 year on year against 1.7 last.
Let's go to the 4 hour chart. I have the same flag here, but it's a little bit more aggressive than Blake has drawn it. You know, depends on, you know, which line you want to take into account. But you know, I already shorted 1/4 of a position yesterday, just to have some kind of an exposure, although I do believe that there is a chance for a jump higher, but I wanted to have, you know, a little bit of an exposure so I can monitor it more closely. And I also believe that, you know, regardless, irrespective of if we break down from here or if we push higher first, I do believe that, you know, we are headed lower because this was an impulsive move. So deep down, I really hope for more Canadian weakness or more USD CAD strength, because that will give me the ability to start, instead of start chasing, to add, to start scaling in as we move higher. Because, you know, I believe that it's going to be very hard for the USD CAD to go over 134.40, 134.50 before resuming to the downside. So, you know, I would want to keep building my position all the way up to 134 something, and then you know, look for a reversal lower. But let's see, because, you know, the CPI reading on its own might be the catalyst for you know, for the next leg lower. We're just a few seconds away, so we're going to focus on the Canadian until then, and then we're going to go over the rest of the markets as we're waiting. Let me open the question box and see if we have anything.
We are supposed to have some US data a little bit later on, like Michigan and industrial production, but I can't be sure that we're going to have them. It's I don't know actually what part of the BLS works and whatnot. Okay.
It's good. So, it's being volatile. Let's see. We should have the data in a second.
Okay, strong CPI.
Oh,
yeah.
There we go.
There you go.
Yeah. There you go. Shit, and I only have 1/4 of a position. Okay, I think I'll have to chase this. Okay, okay, so the data. What did we get, Celio, exactly?
We got CPI year on year 2%
Minus
versus
0,
1.7
yeah,
and minus 0.1
0.1 versus minus 0.4 that was
0.4.
expected,
Yeah.
and year on year 2.0 versus 1.7. So it's quite a lot stronger than expected. Yeah, the data were much better, having to do much better. Unfortunately, you get dragged sometimes into adopting the stupid conception of economics that they teach in universities, and I know that because I've been taught economics in the university. For some reason we consider higher CPI like a good thing, like it is a good thing. I mean, good thing would be zero CPI, but anyhow. That definitely gives some leeway to the BOC, to the Bank of Canada, to be more hawkish in their approach. Now, the way I've drawn this bear flag, the bear flag is already breaking. But there is also, if you want to be more conservative, you can also adopt this kind of a drawing, which if you want to keep, this trend line as support, then you have a pennant in your hand, in which case we're breaking below a pennant. But if you want to be more conservative, then you can just clone this and say that, we still haven't broken the flag, right? So this is the flag Blake was showing. This is a more conservative approach. But on the other hand, you can be looking at it as a pennant, as I showed, or as a more aggressive flag. So, if you want to be completely on the safe side, you can just monitor this, this parallel trend line that I drew to this one, and for confirmation. Yeah, no, it's not.
I heard you say, shit, I only have what? A quarter?
Yeah.
All right. Well, you know what? Some people will have a quarter long position on into this candle.
Yeah, that's true.
Right, buddy? Okay.
True.
Don't just count your pips, buddy. Count your blessings.
Count your blessings. Yeah.
You got a quarter on.
Speaking of my blessings.
You slept last night.
Yeah, my son actually, since yesterday noon, he his fever has gone down, and now my wife has started developing a fever because, of course, it's her turn, right?
Yeah. Anyway,
so let's see if I'm next.
You made a lot. I think you also made a pretty good call when you were showing Netflix yesterday and in front of earnings, and it's gonna gap down. So I mean, so many great ideas here in Face all the time.
Speaking of Netflix, we're probably getting. I said yesterday that there are two scenarios here. One, we confirm that this was a valid breakout, in which case Netflix is going higher. But the other scenario, which I was afraid, it's quite like afraid. It's not that I'm long to be afraid, but the other scenario which I thought might play out is showing bad earnings. And I wrote actually in the chat room for people to know, we do mostly FX, but that doesn't mean that we don't check other things. I mean, I showed a lot of stocks yesterday. So, the whole concept there was that the other scenario was that this will prove to be an island reversal, because if we gap down today, which we will, then, and we open somewhere there, then you have a false breakout and an island reversal at a very ugly spot, right? Because I bet a lot of people got caught long in the worst possible point, being like, oh, we're breaking above the trend line, we're breaking above,
we're going to new highs.
We're going to new highs, that's lovely, and then boom. And one of the reasons, sometimes I'm good with my intuition in those things. What I wrote yesterday in the chat room was the following: I found it a little bit suspicious that Netflix decided to raise prices a few days before earnings. Filtering that through my mind, I thought, like, why would I do that a little bit before earnings? And the only explanation I could think of was because I'm not going to have good earnings, I'm not going to have good subscription growth, so at least I want to mitigate the damage by having people immediately think, yeah, okay, they didn't have subscribers grow, but now they're charging more, so they're going to make more money out of each subscriber. You know what I mean? So, the only explanation I could bring in my mind for them hiking prices a few days before earnings was that earnings wouldn't be good. That's why I had a decently high conviction that we wouldn't get good earnings out of Netflix.
The ultimate contrarian, Steve Bulge.
No. I think it's.
You're just as suspicious. You look at people. What's the
Logical
agenda?
approach. You know what I mean?
Yeah. What's the agenda for doing something unusual? And that was unusual.
Not only unusual. I mean, the timing was suspicious to me.
That's what I mean.
Yeah. The timing was very suspicious. Why not do it at any other point? And as I said, the only thing I could think of was they knew they wouldn't have good earnings. They knew that subscription didn't grow. So at least they wanted the market to be positive by saying, okay, the subscriptions have stopped growing, but they can make more money out of the same business. You know what I mean?
Right.
So,
nice call.
This proved to be the case. It's just approaching with logic. You know what I mean? It's not like nuclear physics. So let's see if we're going to get any follow through. But yes, Netflix will open lower, and this has a very good potential of being an island reversal, which is like a very bearish candlestick event. Yeah. It's a very bearish candlestick event, which you can't get in FX, of course, because in FX we have continuous trading, and you can only get one gap per week. So it's not easy to get an island reversal in FX. I mean, it's actually impossible. But in stocks, you can get that happening, and this will be a good example of it. So at the very least, I would expect some kind. I mean, even if this proves to be a short-term issue, and let's assume we're going to move higher, I would still expect some kind of a retracement for Netflix, perhaps to test this previous high there before higher. So that's the bullish case scenario, because the bearish case scenario is for more weakness. By the way, we never completed, of course, as you've said many times, Coach, you cannot expect perfection in the crab table. I was looking at this head and shoulders formation since it was being crafted, and theoretically the target was at 218. We never made it to 218, and we actually stopped here at the 78.6 of the last leg higher, which was roughly like $10-12 higher. So theoretically speaking, we could even come down and fulfill that head and shoulders target. That about Netflix. Now let's go to the rest of the stock markets, and in this occasion I've been doing it more frequently lately, but I want to go down to 4-hour charts to see what we have here. So first of all, S&P on the 4-hour chart, still trading within this ascending channel. Still also the possibility of having here an ascending wedge. If you take into account this intermittent trend line here, this can also be a wedge. I still think that as long as we trade below 26.90, there is a good chance for a failure. As Blake said, everybody ended up waiting for a rejection from here, and that usually creates the conditions for the market to overshoot. But I couldn't have said it better than Blake did. So I think that this is not a lost cause. Now, on the other hand, which is contradicting, and I'm very happy because Grega made a pattern in play. That's the only reason I didn't create a pattern in play myself. Because if you remember, I was speaking about the DAX some time ago, and I said, listen, for me the DAX is a long, but only under one assumption, that we break 11,000. Why? Because then we complete this inverted head and shoulders formation. Now, Grega decided to go long from lower levels for a very good Elliott wave reason. But personally, I'd rather wait for confirmation. So I would have made a pattern in play here, but I didn't, because Grega already has one which is very deep in the money. But having said that, this is definitely a worth mentioning technical event, the break above 11,000. This is quite a nicely formulated inverted head and shoulders formation. And as you see, I've already drawn the target. The target is at 11,670. Now, having said that, let's not forget that the key level for the bulls is to overtake the 11,800 area, which was the neckline of the huge head and shoulders formation up there. So we can easily make it to 11,670 where the target is, and still not have really cleared the most key area for the bulls. So I want to make that clear. Now,
so at some point, with this kind of chart, Steve, it implies outperformance if we're in a topping phase in S&Ps and we have breakouts of head and shoulders and outperformance of non-dollar stock exchanges.
Yeah,
DAX.
at the moment, at least, it shows that. And if you want, I will also add to the mix, staying on the 4-hour chart, that this is the FTSE 100,
Yeah.
the UK stock market, which, as you see, is about to set up something equivalent here, right? We have the
Right.
previous triangle support coinciding more or less soon with this inverted head and shoulders formations neckline. So, roughly, both of them roughly just above the 7,000 area. So I have to say that, we don't have a confirmation yet, but it looks like the FTSE might actually produce the same kind of event with a little bit of a delay that the DAX is doing. So in that case, we will have another index showing us the same thing. Let me now go back. What index actually made the move first? And I remember it was several days ago. I was speaking on the chat room with one of our Australian clients. And this is, as you see, the Australian index, okay?
Yeah.
So I remember speaking with him and telling him that, listen, he was telling me something about Australian stocks and how they've been underperforming. And I told him that, listen, first of all, we still remain within an ascending channel, which, given the nature of this channel, doesn't look bullish. But as long as we stay, within it, of course, we can keep still appreciating in this slow manner. But I remember very specifically telling him that, listen, there is also a reason for somebody to be looking for an outperformance here in Australia, because this looks to me like a very nice descending wedge. And as it frequently happens with descending wedges, you have the last push lower in the descending wedge overthrowing the wedge, temporarily, which is exactly what happened here, because that very often that's going to take out, the last remaining bulls. And look at what happened since, right? And we're about to test now this double top, in essence. As you see, the upside momentum seems to be quite healthy. We didn't get rejected from there, which was one scenario, which means that there is more upside here. And, where would I be looking for? As you see, there was another ascending channel within the larger ascending channel. So why not? We can push higher towards the 61.8 or even higher to retest that one. So Australia has been overperforming for several days now. DAX is now breaking above a head and shoulder, inverted head and shoulders formation. The FTSE is not far away from doing that. So yeah, that would agree with your point of view. This is, by the way, also the Spanish stock market found support at this descending channel support. This is Italy. Italy, overthrow from this channel, but now, obviously that proved to be like a last gas blower and now moving higher. So yeah, that can easily, what you mentioned can easily be the case. Those are, by the way, which is very interesting. This is a Shanghai composite. If we make it back to this area, then we can start speaking about the possibility of a double bottom, which is going to open, a decent upside from here. So yeah, I do see the vast majority of all of the US stocks, toying around with resistance areas, and drifting higher in a very slow manner, while other stock indices seem to be performing much better. I mean, they seem to be gaining momentum instead of losing momentum. So I think what you noticed makes sense. The only other index that actually doesn't seem so eager to perform that well is the Nikkei. The Nikkei also seems to be having some trouble here. And at the same time, not coincidentally, we're testing here resistance in the USD yen of this, which can prove to be potentially a bear flag. Of course, that doesn't mean that it's going to be a bear flag, because, as I've said, having to do with corrective moves, you always need to be ready to redraw, because a corrective move might start as a triangle, it might prove to be a flag, it might then switch and be a pennant. So it's very frequently that that a move is corrective because of the move that preceded it. But you can never guess what kind of a corrective move you're going to get. So you start drawing and adjusting and only change your mind once you start seeing impulsive instead of corrective characteristics. Now, I'm not seeing any impulsive characteristics yet, so I'm sticking with my idea that this is some kind of a corrective move higher, and I would expect to see more underperformance from the USD yen. But don't take this bear flag as a the line in the sand. I mean, this trend line resistance as the line in the sand in the bearish scenario, because it isn't. Okay, I just wanted to make that clear. They don't want you to know the real economics. Absolutely, that's actually the case, because if people were educated in economics, they would make much better decisions having to do with politicians, and they wouldn't be so easy to fool with populist rhetoric. Okay, because for every politician, it's very easy to try to sell to the audience, to the citizens, that is, something for nothing. But as Milton Friedman has very famously said, there's no such a thing as a free meal, and that's very true. Whenever you take resources from an economy to provide something, those are resources that you're taking away from doing something else that might have proved a lot more productive for the economy, right, in the long run. So, but the easy way, the easy path going forward for any politician is giving something in the short term for seemingly nothing, which of course is never the case. And if people understood economics well, they wouldn't go for it, because they would never choose the very short-term gain for a longer-term pain. Okay, so let's have a look at other things. First of all, cable. As we had said, this was a confluence of resistances. We also saw it on the 4-hour chart. We can go back to the 4-hour chart in the cable. Here it is. And as we said, if we actually make it above there, then we have a confluence of resistances at 130, and 130 indeed has stalled it for now. But as you see, we're coming now back to retest this breakout area. So, cable can easily push higher as long as it holds that level, in which case I would be looking for a move towards 131, because 131, as you see, is another confluence of resistances. It is this descending channel resistance, and at the same time, the 78.6 of the move lower from the September high to the January low, that spike low that we had. Okay, so I wouldn't be jumping the gun, like being short just because 130 was a nice resistance area, and so far we're seeing a reaction from there, because we can easily make it at least towards 131. Now, in my opinion, 131 is a key level, because if we actually do break above 131, then the potential of the market squeezing higher starts becoming, the possibility starts becoming quite high, because I am pretty sure that a lot of stop losses are accumulated above 130, and especially above 131, 132, etc. So I think that, as we start triggering those stop losses, they're going to be taking us to the next area of stop losses, which is going to be triggering those rinse and repeat, and you understand how it is. Then it becomes, in essence, a chain reaction in a market that has been conditioned to be short the pound for a long period of time, and they still see that there is no resolution, and that keeps people appraised that, okay, still being short is probably the path of least resistance, which to be honest, it is until proven otherwise, right? But I'm explaining why this logic, once we get a technical event, can start working completely against the market, and perhaps can even create some kind of a very violent reaction that wouldn't even fit the fundamentals of the moment, right? I've seen that happen in the past multiple times. So, being short and looking for more weakness makes sense, as long as you understand that above 131, probably then there is, it's squeeze time, and fighting the market for a period of time would probably be a bad idea, unless you get lucky and you get some kind of a take bomb that will stop that kind of a chain reaction. Do you think there is a similar bear flag on Euro USD daily, like the bear flag you pointed out on the USD CAD? Okay, let's have a look at the Euro USD. First of all, I know exactly what you're talking about, and you're talking about that perhaps this, let me draw the parallel of this, can be a bear flag? And the answer here is that yes, it can. Although I have to tell you that the loss of momentum to the downside is something I wouldn't like if I was short. That's why my whole idea with Euro USD, as I said yesterday about the pound, is there are so many FX pairs that are moving with much more conviction and have produced much better looking technical patterns. So why would I want to invest my capital in hoping that something is going to happen with Euro USD and with the pound? So my response is I don't want to be part of any trading in Euro USD as long as that doesn't change. But I have to tell you two things. First of all, this false break higher from the 114.50 area is definitely not a bullish event. It's actually a bearish event. Okay, so I don't like this false break higher. Usually, this kind of false breaks lead to more weakness. So that's point number one. So yes, if you put a gun in my head and ask me if I would want to be short or long the Euro USD, it would have to be a very tough decision, but I would probably choose to be short. Okay, and in any way, even if this is not a flag, let's take it oppositely. Do we see any kind of an indication that we have some kind of an impulsive move higher? The answer is no, we definitely don't. So I think that as long as that's the case, the path of least resistance remains lower. Okay. Having said that, as I repeated before, I think there are much better places you can invest your capital than waiting finally for some kind of a productive move and the resolution in the Euro USD. Until that happens, you're probably and I'm not talking about you because it's not that I know what you're trading, but I mean for people that might be like focused on just a couple of pairs like Euro USD, the cable, and a couple of more, they might be having a tough time sitting on their hands, doing nothing, or trying to make the market produce something out of nothing. And at the same time, you're probably missing out on opportunities, to do something more productive with your capital. Now, let me see if we have any. What will be the effect of Canadian CPI? Theoretically speaking, the higher the CPI is, the higher the chances that the central bank is going to be more hawkish, meaning that they're going to be less loose with monetary policy. The more likely they are that they're going to increase rates, which points to the possibility of the currency overperforming, right? So a higher CPI points to a possible move higher in the Canadian, which means a move lower in the USD CAD, ceteris paribus, meaning that nothing else changes. That's what ceteris paribus means in Latin. I hope I never meet a guy who keeps putting a gun to my head. Ziggy, I totally agree with you. Indeed. Let's hope we never meet that guy. Okay, what's your view on the S&P in 2 to 4 days perspective? What I said. I think this is the very bad area to be buying the S&P, right? Now, nobody can tell you what's going to happen in 2 to 4 days specifically, but I definitely would not want to be high here. Let me say here that within like 17, I think, trading days, we've already climbed higher by 13.5%. So we are already overdone in the short term. So even if this is like the first leg higher of a new bullish move, which is not impossible, I think that this first leg higher must be very, very, very close to an end. So we should see some type of a pullback, even if that's going to prove to be just a pullback in the beginning of a new bull market, right? So buying up here makes no sense. By the way, speaking of the Canadian, which we saw before, I have to say that this kind of a price action, is not very bearish because we did see good CPI data, and the Canadian has already retraced the vast majority of its losses. So that keeps the possibility of more upside. That opens the possibility for more upside before seeing downside, which, as I said since the beginning, I prefer to see more upside. I want to build a bigger position before we actually move lower. So, let's see how we close the day. But definitely the fact that we've retraced somewhat so far and we're not seeing any continuation is not a bearish sign for the USD CAD for the time being. So this this corrective move higher might have more to run. Cable has one of the cleanest double correction patterns. Yeah, that might be the case, but we need more time. Greeting phase, if DAX can go 3% higher and FTSE bullish, Nikkei bearish, how high can the S&P 500 go? Thanks. No idea. I'll explain. I'll explain why I mean no idea. We currently have a couple of events that affect specifically, not exclusively, but specifically the US indices. For example, we currently have the government shutdown in the US. We have the upcoming discussions with the Chinese having to do with tariffs. So in theory, we have some pending issues that can help or hurt the US indices outside of what the rest of the indices are doing. And since this is clearly the case, I don't think that you should necessarily try to connect those in the short term, right? Because in the short term, they can easily diverge. Of course, in the longer term, they more or less converge in how they're reacting, but in the short term, we can see definitely divergence. By the way, Coach, I forgot to check the site earlier. Do we have an interview today?
Not today, bro.
Okay, cool. Please, could you tell the strength of JPY and Nikkei? What do you mean, mate? I already showed Nikkei, that Nikkei is kind of struggling, the same with USD yen. So, my point of view here is that this is the 4-hour chart on the USD yen, right? There were two potential scenarios I was looking for. The first one was potentially a pennant, which we've now invalidated because we broke above this intermittent trend line, so I can delete that. But we still have the scenario that this is some kind of a flag, in which case we can easily push higher towards the 61.8 and previous support area at 110.25. So I do think that the path of least resistance for at least one more move is lower for the USD yen and equivalently probably for the Nikkei. But we might see more strength initially before we see a reversal. And I wouldn't be jumping the gun. I would obviously been waiting for some kind of a candlestick reversal pattern on the daily chart, or some kind of a reaction from a key level for me to feel more confident about this interpretation. Corrections are healthy and allow new money to be put to work. Seems there is no real structure to this market. Yes, lately we've had no structure in the market. I agree with you. I mean, that's why it's a very tough market to trade during the past few months, especially in FX. What is the difference between a wedge and a triangle? There's no difference. Let me explain. Wedges are triangles. Okay, so geometrically speaking, wedges are triangles, but we use the terminology wedge specifically when we're talking about a corrective pattern that we expect to produce continuation to the prior move. Okay, so wedges geometrically are triangles. Okay, so there is so if you call a wedge a triangle, you're not doing any kind of a mistake. Read first part of question, please. Oh, okay, then I lost it. Sorry for that. Let me go higher and read it. In your view, why are central banks and governments so against the stock market dropping? Yeah, sorry. You're absolutely right. I missed the first part. It's very simple. I've said it in the past. Probably you were not in one of those webinars, which is absolutely okay. But, the other people will have heard me say it. Simply because the last couple of economic recoveries are not based on the fundamentals of the economies, but are purely based in inflating asset prices and creating the wealth effect. So since the major pillar that is holding higher the economies is not the real fundamentals, but the wealth effect, if they let the stock markets unravel, that will immediately reverse the wealth effect, and that's going to be the straw that's going to break the camel's back, because the fundamentals are already very shitty, if I may say so, for the global economy. We have more debt than we ever had. We have a very tepid growth, and even that growth is questionable at best, because if you keep in mind that growth is also being adjusted for inflation, and it's an more or less, if you understand economics, is an undisputed fact that the CPI is being toyed around with from all the governments. I'm not even certain that we actually do have nominal growth if you measure it properly.
It's also a great tax generator for governments, capital
absolutely
gains and so forth.
That's a good point as well, Coach. Yeah, it's also a very good tax generator. That's a very good point. So if they let that fail, if they let the stock market fail, the economy will fail immediately. When I say immediately, that was not the case in the past. When the economies were healthy, I mean, we had incidents in the past that we had bear markets without the economy going into recession. Trust me, the economy is structured in such a way at the moment that there is absolutely no chance that you're going to get a bear market in hand and you're not going to go into a recession. No chance.
They say, Steve, that what happens on Wall Street affects Main Street 6 months later.
Unfortunately, this is how it is, and this relationship has been strengthened vastly, by what I explained, Coach.
Yeah. So, I mean, what happened in December, I don't know about you, but the way the markets have been trading, even on this rally, to me, I would see trades, like at a rapid pace. And now it's like it's slowed down dramatically between trades. Even the most liquid instruments aren't trading the way they used to do before December. There's some kind of structural thing. It's been eerily quiet on this rally, don't you think?
Yeah, absolutely. By the way, I have two more questions.
Okay.
One has to do with CAD yen, which we're seeing here. So CAD yen is breaking above an important area of resistance, as you see here, but we have the 200 DMA very close. If we do break above there, we have a nice confluence of resistances up at 83.58. So I have to say that another leg higher in the CAD yen is not unlikely, but don't lose the big picture. What is the big picture? Is that we had a very large corrective move here. You can see it clearly, and we've broken below it. We have seen nice continuation, but as long as we remain below this channel, I will be viewing this move to the upside as corrective until proven otherwise, instead of anything else. Now, that has to do with CAD yen, and let me have a look at Aussie yen. Aussie yen. We're on a 4-hour chart, by the way. As you see, Aussie yen also testing resistance here. Actually, nice confluence of resistances. It's the 61.8% fib. As you see, if I zoom out, previous support, previous resistance. So key area here. I have to say, though, that the price action, if you see up close on the 4-hour chart, this looks like a bullish consolidation. So, if I didn't know that this is a strong confluence of resistances, I would be 100% convinced that the Aussie yen has more upside before turning lower. Okay.
Where's the 200 come in? 79.5.
This is, Coach, the 200, though. This is the 200 on the 4-hour chart. So this is
all right.
Okay. Yeah. The next area of resistance I have is at 79.60. So I'm almost 100 pips higher. I'm pretty convinced that we're going to make it to that area. And then the next area of resistance is 80.50. So as I said, I don't think you should be fighting the Aussie yen move yet. Although buying it right on resistance makes no sense. It looks to me like it has, more upside in the short term. So I would be waiting for some kind of a reversal before looking for some kind of move lower. The same friend that was asking before for the stock markets is asking again, is it possible for this to continue like this? At some point, markets have to correct when the business cycle ends. I totally agree with you. This is completely unsustainable. But you know something? It's literally a Ponzi scheme. And you can never be certain how long it will go on until it finally implodes, okay? So, the fact that fundamentally speaking, it's a Ponzi scheme and it's going to end up in a very, very bad way is undisputed. But look at Peter Schiff. Peter Schiff, for example, in my opinion, is one of the few people that understand how an economy works better than 999 out of 1,000 economists. He has been, though, trading his fundamental viewpoint for many years and lost the opportunity to make money to the upside. Now, the fact that he's right in how he interprets the economy with the fact that he hasn't benefited in between are two completely different things, right? So I respect and I agree with the vast majority of his fundamental views, and he's going to be proven right, in my opinion, 1,000%. But that doesn't mean that you should be losing 10 years of your life trying to fight a Ponzi scheme of governments. So, I also want to see technicals show me and some kind of a big trigger event telling me that, okay, this is the end of the line, right? Now something is changing. If I can take a look at the USD Swiss, things in the USD Swiss are quite simple. Look at the RSI, look at the chart. Both of them are telling us that the USD Swiss is breaking the upside. And as I said, and thank you for reminding me, because we had a friend asking for Euro USD, this reminds me that an extra reason, and I said it a few days ago, for me not liking the Euro USD to the upside, and if you remember, I said that even when we were breaking above 114.50, is the fact that the USD Swiss is telling me a different story. The USD Swiss is telling me that it wants to move higher. And seeing the USD Swiss telling me that it wants to move higher, yes, it can diverge from the inverse relationship somewhat due to the effect of the Swiss franc, but it cannot keep, for example, appreciating at the same time that the Euro USD is appreciating, not chance a million. They can diverge a little bit, but they can't take the same path and keep following it, right? So I think this is a break higher in the USD Swiss, and that should make you even more cautious with any potential bullish interpretation in the Euro USD. Okay.
Great old school correlation that people forget about since the peg, because they thought, well, I can't rely on this correlation, but it's worked for years.
Yeah.
A lot of people don't follow it. So very nice mentoring.
Ben says, thank you, Coach. Ben says, cycles and price will tell you when the party is over. I agree with you, Ben. I mean, there are a lot of things to monitor in the market, but I can tell you one thing. When this party is over, there is going to be real trouble. And I'm not only talking real trouble in financial assets. Keep in mind, this is mostly a political conversation. When I say political, I'm not going to go into the story of Republican Democrats. I couldn't care less anyhow. I'm not voting in the US. And even if I have to be honest, even if I had to vote in the US, I would be desperate, more or less, because I would probably not vote for any of the two parties. I can tell you one thing. When the party is over, oppressed people are going to be blaming capitalism once again. And as I was saying yesterday in the chat room, what we have, for example, let's take the US. The US is moving further and further away from pure capitalism since decades ago. So it's not an accident, in my opinion, that the more it diverges from the path of capitalism in the US, the worse it performs. But it's a victory of the left that they've actually convinced people that what is to be blamed for what we're getting, I mean, financial crisis and everything else, is capitalism, when in fact is not capitalism, right? It's the exact opposite of capitalism. Is state intervention trying to make the markets function in a specific way, which is exactly what capitalism would never do. Under capitalism, you would never bail out the banks, ever. Any business that fails under capitalism defaults. End of story. That's it. Because capitalism is of the opinion that the means of production, land, capital, human labor, etc., entrepreneurship should always be directed to the most profitable task, and that's something that the market is always going to adjust on its own, right? It's going to bring it to an equilibrium. So whenever you intervene to make something different than the market forces want, you deviate further and further away from capitalism. Yeah, deep state running USA. Yeah, so you can blame the problems to state intervention and crony capitalism. But keep in mind, crony capitalism, it has the word crony in it, but it keeps the word capitalism, which in my opinion, for people that don't understand, it sounds like it's a form of capitalism, but crony capitalism is actually the exact opposite of what capitalism is. I mean, crony capitalism is the exact opposite. It's based on the exact opposite ideas, because capitalism is all for competition, while crony capitalism is the way to move away from competition, to build monopolies, to build oligopolies, which is exactly what the market doesn't want. If you let the market function on its own, it's never going to create situations like that, right? So yeah, this is a big conversation, and I bet many of you perhaps are not even interested. At some point, I would be more than glad to. I would be more than glad to make with Stelios a webinar that is going to be based purely on explaining how an economy works and politics work. And as I said, when I say politics, I don't mean specific parties or whatever. I mean politics and how they influence the function of economy, etc., etc. And if it is a separate webinar, at least I know that the people that are going to be joining are going to be interested to hear exactly that. So
I always love to hear it, Steve. I mean, I learned from you. I have a question. Is Face having a webinar Monday?
I have absolutely no problem about that. So, Coach, if you want to take the day off, I can handle it with Stelios. So yeah, we're going to have a webinar on Monday.
Okay. All right.
Okay.
Okay. Great job, Steve. Hey, guys. Friday's still early in the day. Plenty of time to sign up. And, I know you get a lot of great things in Face for free, but if you always avoid paying someone else for the good work that they do, I think you're going to have trouble getting paid yourself for the good work you do. So, Face is the tip of the iceberg, and you probably could get by with it, but I'm telling you that having access to the pattern and plays and what happens in the members chat for 15 hours a day or more, and having Paulie prime you for U.S. openings with the European crossover that's only available to subscribers is I think going to reward you multiple times. So join and enjoy your weekend. And I'll be back Tuesday. There will be a Face webinar, and enjoy the, people have called me a lunatic because of my, personality, but there is a a full supermoon lunar eclipse on Mondays. So you might get some reversals here. The S&P is approaching some key zones, and the dollar's been stuck. So, maybe some decent fades here going into late today, early next week, and I look forward to working with each and every one of you again in Face, and really recommend that you have another paycheck coming to you and get rebates. So call Trent and Justin and enjoy your weekend. Smell the roses, do your homework, and let's get them next week. And most of all, don't just count your pips, count your blessings. So I want to thank the whole team, the best team on the internet. I don't think you're going to find a group of effective, humble, helpful traders on one site anywhere else. If you do, let me know where it is, because I'd be surprised. So, and with that being said, don't just count your pips, count your blessings. Everyone have a great weekend, and we'll see you next week. I'll see you on Tuesday. The rest of the crew will be here on Monday. Good hunting the rest of the day. Adios. Thank you, Steve.